as David Shapiro has returned from his trips to the United States, he was able to see the likes of Warren Buffett, David Einhorn and Steve Eisman. He tells us more about those gentlemen. Well, you're going to take center stage today.
It was quite fascinating. I must say I enjoyed Berkshire Hathaway more than I have over previous years. A lot was said there. I was at a value investor conference at the University of Omaha, and then I stumbled upon what is called the SON conference at Lincoln Center. And that's
what kind of conference?
It's called SON, Iris SON. It's in memory of a young chap who lost his life very early in his career through cancer. And all the proceeds go to pediatric cancer research. So there was where Eisman was, Druckenmiller, Chanos, so there were. And what happened at that conference, Bronwyn, is you had to give an actionable idea. Unfortunately, I had to sit through a presentation by a chap called David, I'm trying to think of this, Stemmerman, who absolutely wiped out African Bank, called it a big short, and it was very negative on our credit cycle here. And I sat there saying, who cares in this audience? But apparently a lot of people did, because I think most of their shareholders are negative. So. But there was a lot that I learned. You saw it on the front covers of The Economist today and of Barron's. The bulls are back, and I think that generally was the theme.
Do you sense that's the tone? Is it a genuine fundamental bull, or is it because they don't feel they've got other alternatives?
That's it. There's no other alternative, but interest rates are going to remain low for longer. They're not questioning what the outlook is. It's very, very difficult. Without exception, even Warren Buffett said, look, there was no alternative other than to use stimulus to keep the American economy afloat. But how we get out of it, he says it's easy to buy the bonds. How do you sell them? I don't know the answer. He said it's like watching an exciting movie where we don't know the ending. So I think that summed up how people feel, but they're very negative about bonds, believing somewhere along the line rates must go up.
It's not going to be a very exciting movie if we knew the ending.
No, I know, but that's...
Would you start off by knowing how it was going to end and going into that movie house?
But that's the whole point about where we are in the world economy at the moment. No one can find their way out of the kind of mess that we're in at the moment.
But some movies you might not care how it ends, right? This movie you need to care how it ends.
You do need to care. It's got a huge bearing on your wealth creation going forward. But have you been convinced on the value investor side? I'm always interested when you come back from these value conferences.
I've picked up a lot of ideas. To try and summarize, which was about, I don't know how many hours of lectures, I think a couple of themes that are coming through is what they call 21st century infrastructure. Now that will include not only the gas, exploring for oil and gas. So you'd look at rigging infrastructure around pipelines. That's the one. And the other is media to mobile. In other words, the whole shift away from PCs, to mobile, but also a lot of media and data coming through. So those are the two massive themes that came through, and investments around that. A lot of ideas around that, especially oil exploration.
Is there quite a lot of expansion going on in terms of those two sectors? In other words, is there new money going into those industries in the US?
Huge, huge amount of money. It's not only that, it's globally, but when you look at the oil industry, there's so many industries around it. And one of the most exciting is a REIT, a real estate investment trust, that is developed around the need to house your workers at all these at exploration at the mines, what they call that, oil wells, etc. And you have thousands of people living there who pay rent. So you have companies who actually build the houses and so on. So that was a theme. The other theme is, of course, there's not enough rigs. That's out when you explore in the sea. There are not enough of those huge rigs for the kind of exploration that's going to take place. Then there's the pipelines that you're going to be building in America and that, so on. So that's a theme. But the other theme is technology.
And the idea of government now pulling back, is that a big concern, that the government's obviously spending less, the sequester, the lack of clarity between Republicans and Democrats? Does that
not a theme, not even a consideration. Didn't come up at all. I think mainly, there was a very good saying, we're looking at the micro side. And they said, if you don't do macro, macro will do you. In other words, you can't ignore the whole macro situation.
Still with global news, Eurozone finance ministers met in Brussels today to approve a €7.5 billion bailout for Greece. While over in the US, April retail sales rose by 0.1% after a revised 0.5% decline in March. As we unpack all this data, we're joined by Joe Rundle, Head of Trading at ETX Capital. Joe, thanks so much for your time. Let's get your take on what we're seeing out of the Eurozone right now.
Well, I think the Eurozone is in this interesting phase. The bailout will probably go through, and I think it will carry on growing slowly. I think Germany's in a really interesting position. It doesn't actually want any growth in the rest of the Eurozone, and so sticking with this ultra-hard austerity and until the Eurozone grows slowly, all that time Germany's booming and has experienced massive growth.
Joe, do you think that we'll see a change in the approach to this austerity after the German elections in September?
Yeah, I think we might see a slight change. I think as long as Chancellor Merkel gets re-voted in, I do expect her to take some slightly longer term views as to solving this crisis. But it will be very, very slowly, and Germany are going to stick to this austerity. So in the absence of someone finding growth outside of Germany, I do expect it to continue. There might be some small concessions, maybe some debt write-down to the southern Europeans, but nothing really drastic.
The French came out today apparently saying, you know, that's the end of austerity, that they're looking for growth. Do you believe that they will fine-tune it to an extent where Europe tries to catch up with perhaps what's going to be happening in Japan and in the United States, you know, or do you think Europe's just going to fall further behind?
Well, I think the whole thing about the Eurozone crisis is they've always been completely reactionary and haven't actually done anything, which is the problem with a political assembly that's not really all aligned. So I think you will see the Eurozone not really doing anything. France is trying to get the austerity program relaxed, and it really has some quite structural issues, France, and is really struggling. And I do worry that the real catalyst, if there is going to be the next stage in the Eurozone crisis, is a sudden French slowdown, which could really cause a spike on their bond yields, and then it really is left to Germany to pick up the whole price for the Eurozone, the whole of the Eurozone.
Joe, would you see the euro continuing to fall against its major trading partners in the months ahead?
Sorry, guys, that's...
Would you look to see the euro continuing to fall against the major crosses for the rest of the year?
Yeah, definitely. I think the euro is gonna weaken, and I think that's why Germany is so sticking to this austerity package. I'm actually surprised it is so strong against the dollar at the moment, with the US recovery that we are seeing. So I do think we will see euro weakness and quite significant towards the second half of the year. All this time, Germany is having fantastic competitive advantage on what's a major exporting country. So I think it's definitely in their interest to keep the euro weak, and I will expect it to continue.
Joe, thanks very much for your time. Joe Rundle, Head of Trading at ETX Capital, and let's talk about this industrial production out of China today as well. Slightly worse than was expected, and again we're seeing the market reacting to that, commodities selling off, but we've got a mixed bag again. Kevin, let's go to you.
Yeah, look, I think the Chinese data, for some reason, people keep thinking or hoping that it's going to get significantly better. Whereas in truth, that's not really what China wants. They want to consolidate the position. They want to switch from
It's a manufactured slowdown.
Yeah, I think so. And I think they want to reshape the economy from being an industrial producer to more a balanced, where you've got more consumption. They want to manage the property sector better. So there are a number of big issues going on within China, and all of those suggest still around 7.5, and we call that modest growth, but there's nothing wrong with it. And I think where the market keeps getting caught out, it is thinks somehow that China will generate better numbers. Also, I think people don't appreciate that China still needs the rest of the world. And if the rest of the world is not doing particularly well, the Chinese data is not going to get significantly better. There's no decoupling that has gone on. So I'm not too surprised by the numbers. Where I think the numbers are getting meaningfully better is the US data. I think that the US retail sales out today, I thought those were great numbers. They're April numbers, so they're well into the year now, and they were certainly a lot better than people thought. And when I look at a whole range of US data, the housing data, consumer, anything to do with the consumer seems to be holding up, even a little bit more investment. So to me, there's this nice story that's unfolding there. And just maybe, we could talk about it a bit, but just maybe the Japanese story starts to take hold.
Is there energy on the ground in the US?
I think it's starting to improve. Wall Street, I think, is a barometer of where the US economy will go. People start to feel better. Still a lot of issues there. Still a lot of issues, with the common workers. While investors are feeling well, I still think people are insecure and worried about their jobs. But there's no doubt that there's a better feeling about America. And housing, the odd thing, a stat that I picked up, or I was told, was that the inventory of single homes is the lowest in 30 years. In other words, the capacity has been taken up. So now you'll start to see more homes being built. And of course, that's a major stimulus in the US economy.
Take us quickly through your thinking on Japan.
Well, if you look at Japan, obviously there's a huge stimulus that's underway. We need to stress that it's only just starting. And that stimulus looks to double their money supply over the next 2 years. You've already seen their currency weaken by about 20% against the dollar. And the stock market, believe it or not, I'm not looking at the long-term history, but over the last year, their stock market is up almost 70% year on year. That's in yen, so yes, it's got a weak currency. So if you put it into dollars, it's not as spectacular, but it's a phenomenal improvement. And just maybe that improvement in the equity market coupled with some inflation coming through, and you could see the making of a pickup in consumerism within Japan, which is what they really want. So the exporters are doing well because the currency's weakened, but you need the consumer in Japan to start to spend some money. And if you get some inflation and you get a bit of a wealth effect, but by that I mean through the equity sector, you can get some traction.
Kevin's telling us as though he expects us to shoot him down.
Yeah,
I understand exactly what he's saying, because there's two camps in Japan. There's a camp that, without getting too complicated, and I'll be brief, and where there was a positive 2% real return because of deflation. Now, if RB goes for a plus 2% or Kuroda goes for plus 2% inflation, it means that interest rates have to go to 4% from zero, which can create havoc. So that's the bearish side on that. So that's why Kevin's saying, hold on a sec, it could go either way.